A common issue and potential problem for companies creating payables transactions is the proper treatment of deferred expenses. Let's take a look at how Dynamics GP handles that. I'm going to create a payables transaction from my associated insurance vendor. Let me enter in the required information, vendor ID, vendor's document number, and the dollar amount of the transaction. Next, I need to open the distributions window. And you can see the default general ledger distributions as determined by the vendor's setup. In this case, everything going to prepaid insurance. Next, I need to create the actual deferral. I'll enter the start and end dates of the deferral. In this case, it matches out to the start and end dates of the insurance policy. Select the method for how I want to apportion those dollars, and then determine what expense account I want to use when I recognize those expenses in the future periods. The system then calculates the period dates and dollar amounts for me. I'll save my changes, close the distribution screen, and now post the transaction. While GP posts this transaction, in addition to creating the payables entry, it's also going to be creating all the future journal entries to reclassify my asset, prepaid insurance, to my insurance expense account. This allows me to handle the entire process in one step. I don't have to rely on my memory or some tickler file to remember to go back and create those distributions in general ledger journal entries. Just a quick illustration of how GP handles deferrals.